Hi there, welcome to Kneppy Invest, and welcome to the second day of May. A fairly dull grey day in Brisbane, and I don't mind that. Or I'm doing two night shifts during the next two nights, and that means I want fairly cool conditions tomorrow, and more than likely I'm going to get that. Anyway, an interesting day on the markets, particularly in America, because the Fed did have a meeting and the expectations were that interest rates were going to remain where they were. But really interesting reaction from the market during the last few hours of trading, and I'll touch upon that later in the video. And we're still in reporting season in America. Seems like reporting season goes on forever over there, and really negative reactions from the market. So we are talking about a lot of companies dropping between 10 and 20%, either last night or more than likely tonight. And some of these companies are fairly famous. So I talked about Starbucks last night. They're down 16, or they were down 16.9%. DoorDash down big. Estee Lauder down big. CVS Health down a big. Estee Lauder down big. Kraft Heinz down. Yum Brands down. Etsy down. A couple of companies had a good results. Pfizer up 6%, and Garmin up 13%. And I probably helped that because I buy Garmin stuff. Okay day on the markets in Australia. I was a little bit intrigued to see how we were going to react because of that volatility in America, but looks like most of the indices and sectors are up. I'll touch upon the ASX today later in the video, and I also have a top 5 announcements. And these 5 companies are quite big. In fact, 2 of the companies are among the biggest companies on the ASX. I'll also touch upon some of the honorable mentions, some of the companies that did not quite make it onto the top 5 or in the top 5 announcements of the day. And maybe I'm a little bit biased. And I'll probably just mention that I do have a few other videos planned. I am doing a video on Mayfield Group. I'm titling that Small Caps to Buy. And just based off viewers of this channel, they like any sort of title, video title, that has small caps to buy in it. In fact, 2 of my most successful videos have been titled 2 small caps to buy. So this is only be focusing on one company, so Mayfield Group. I also plan to do a video on Vection Technologies and also Big River Industries, and maybe both of those videos will be also in that series, Small Caps to Buy. Also have to do a top 10 for season 5Bs for the March quarter. Haven't come up with a top 10 list yet. I will probably get through that, or hopefully get through that tonight. And I think that's all I have in regard. And if you do want me to answer any of your comments, any of your questions, if you have any queries, anything to say, just leave in the comment section of this video, and I'll get to that particular question on Saturday when I do a standalone answer and reply video. Okay, before we have a look at the ASX today, let's have a look at 2 tweets which could make us better understand what happened on the American markets overnight. So before we have a look at those tweets, let's have a look, and I want to touch upon Amcor, which was a stock of the day yesterday. But before we have a look at these 2 tweets, let's have a look at the NASDAQ overnight. Really interesting. You can't see this when you look at the daily chart. In fact, you don't see much at all. Although if you do understand candlesticks, you'll be able to understand that there was a fair bit of selling during the day. And you say during the day, don't know when that was the start or was the end of the day. So I like to look at the 1 minute chart. And before I turn to this, I'll just talk about what happened to me overnight. So I'm an early riser. And when I say early riser, I don't mean 6 a.m. I mean sometimes as early as 4 a.m. That's just me. And typically when I get up or when I first awake, that might be it. I might snooze for like 30 or 40 minutes, particularly if I initially wake up at 4 o'clock. So this morning I woke up at 3:55, which is a little bit earlier than what I would like. But being a person of habit, we're all people of habit, I checked to see what happened on the American markets overnight, and the NASDAQ was down at that point in time 0.4%. And then I was just doing my Wordle, just looking at other stuff on my phone because I don't like to go out for a walk or take the dogs for a walk until about, well, just after 5 o'clock. So for the next hour, I was doing all that. And then at about 5 a.m., maybe it was just before 5 a.m., I went back to the market and I saw and was a little bit surprised because I had to refresh it. That's how I know I was surprised. Had to refresh it. And the reason I did that was because the NASDAQ was up 1.3%. So it went from being down 0.3% to being up 1.3%. And this might have been just after 5 because the Fed meeting was around 5 o'clock. And then I took the dogs for a walk, and just after 6, when the markets closed, I had another look at the NASDAQ, and the NASDAQ was down 0.7%. So extremely volatile American markets in the last few hours of trading. So let's have a look at the 1-minute chart for the NASDAQ. You got to see that. This is insane. Sort of like a mountain, sort of like the Matterhorn there. Why is my video not? Sort of like the Matterhorn. So yeah, the NASDAQ started to really rally at about 4 o'clock. So maybe that was a time when the Fed chair, what's his name, Powell, started to talk. We started to see it rise then, and it really took off just after 4:30 a.m. So when I actually had a look at the NASDAQ, it was almost at its peak at about 5 a.m. at 17,660, and then it just collapsed. In the last 30 minutes of trading, it went from 17,660 back down to 17,318. In fact, that was almost the low of the day, not quite the low of the day. So really interesting trading on the NASDAQ. There were a few tweets saying, or just talking about the massive rise in, or the rally in the NASDAQ before it plunged, and no mention of the plunge. So this is one of the tweets that I want to talk about. This was sort of explaining, and this is from the Qube letter, and they actually said stocks are sharply higher after today's Fed meeting, largely because it went as expected. Hawkish expectations have been priced in, but they could get even more hawkish. But then we had the drop. So this is a summary of Fed chairs. And yeah, it is unlikely that the next policy move will be a hike. And I think the market saw that and went, oh, excellent. So we're going to buy stuff right now. Powell does not believe we are seeing stagflation, which is counter to what a lot of other people think. And I suppose he might be being a little bit optimistic. 2024 election is not part of the Fed's thinking, and it should never be a part of the Fed's thinking because they should be completely independent from the federal government. That's true not only there, but also true here. Unexpected weakening of labour market could spur rate cuts. The Fed is not satisfied with inflation at 3%. Why not? Inflation at 3% is okay, in my opinion. I do believe they're being a little bit stubborn in regards to inflation being like at 2%. There's no reason why it has to be 2% instead of 3%. That's just me. It is unclear how long it will take for rate cuts to begin. Who knows? Yes, rate cuts could start, I think, in a month's time, or could start next year. And I think it all depends on labour market. So if we start to see unemployment starting to rise, that could push us into a recession. This is in America because they don't look at GDP as a deciding factor on whether they're in a recession or not. They look at a few other factors. In fact, they have a committee who decides whether the country is in a recession. And they did have last year or so two quarters of negative GDP growth, but they were not in recession because the committee said no. And the reason behind that was the strong labour market. So if we start to see weakness in the labour market, I think there is potential that America might be declared in a recession if other things or other factors are negative. Now, I also discussed earlier about the bad results in America, and there was another tweet from Qube, a letter, and this was saying all the data says the economy is strong, while list of 6 companies here who saw the share price or will see the share price fall significantly because of their earnings. So Starbucks, DoorDash, Netflix, which was a while ago, CVS Pharmacy, Etsy, and eBay. Didn't even have a look at eBay. Is the economy really that strong? Now, you might have heard that the stock market is not the economy. So the economy is not the stock market. So I'm not a big fan of just listing these 6 companies and just saying, well, if these 6 companies are struggling, the economy must be weak. I don't absolutely or actually agree with that because other companies, as I mentioned, Garmin was up, Pfizer's up, maybe it's just a selection. If you selected 6 other companies that had a good quarter, you could say, well, look, these companies have performed really strong in the quarter, so the economy must be strong. I do agree with this one though. The next comment: most consumers would say the economy isn't as strong as the data suggests. I actually do believe that there is a disconnect between data and reality. I actually do believe that, but again, I think I've mentioned this a few times. When I bought a house, was it 2010? Interest rates were about the same level they are now, and no one was complaining back then. In fact, that was the norm. I think we were, don't want to say blessed, but the Reserve banks didn't do us a favor by lowering interest rates to where they were. That was our expectations moving forward, that interest rates will remain low, and where they are now should be where they should be. And that's just my opinion, because they were too low, just above 0%. Okay, so interesting goings on in America. Yeah, so I might have a look at some of these charts, maybe one or two. Wait to see how much time I've got left. Anyway, so let's have a look at the ASX today. So an okay day on the markets. So as I'm recording this, about 45 minutes, actually we'll say about an hour left in trading. Time is currently 3:12 p.m. So the closing auction will be finished in just under 1 hour. And as I am speaking, overall good day in the market. We have seen the small caps, all tech and resources were down in early trading, but they have all recovered, while the XGO and all odds have been up all day. So there was a nice little rally. Looks like halfway during the day, just based off these little graphs I can see up the top. So that's how, and you can actually see here, there's a nice little rally after 11 o'clock. Not sure what happened after 11. And X-Tech, all tech, was actually down at about 10:40 a.m. Anyway, and now all tech is higher than the XAO. Well, the percentage change today is, or for the X-Tech, all tech is higher than the XAO and XJO. Anyway, let's have a look at the sectors. So some good sectors performances, some bad sectors performances. Staples down 2.4%. I wonder if that's because of Woolworths. I'm going to have a look at Staples sector. So that would be Woolworths, and they were down last time I looked. Energy down, utilities down, telecommunications down, and discretionary almost flat. While IT's had a good day, industrials had a good day, financials had a good day as well. Maybe that's because of NAB half-year results. Real estate and materials okay as well. Gold's had a good day. It's a lot of volatility in gold. A really bad day yesterday. Okay day today, but not quite as good as it was bad yesterday. Banks have a good day, probably because of NAB. And most indices up. So let's have a look at which indices are down. So again, yeah, staples, utilities, energy, communication services, emerging companies, all down. Let's go back and have a look at staples. So we have Woolworths, Coles, Wesfarmers maybe. Let's have a look at the by market cap. There's Woolworths down 4%. Coles down, Treasury Wines down, Dever Group down, A2 Milk down. Yep, okay. Metcash down. So the 6 biggest companies in consumer staples down. And then we get to Bega Cheese had a pretty good day, up 5.8%. And Cobra Estate Holdings is up. Good work. So a lot of these are food, had to do with food. I suppose consumer staples, yeah. But anyway, I think this was led by Woolworths because that is by far, if you look at the weighting, Woolworths would be heavily weighted. This particular sector would be heavily weighted towards Woolworths and Coles, and both of those are down by 4 or 2%. Okay. Now, the next thing I'm going to do is look at the top performers and worst performing companies on the ASX today, just to see if I've missed anything. I might have missed one or two. So the best performing company is Krakatoa. Probably my favorite volcano is Krakatoa, up 45.7%. Okay volume, and I do remember there was an announcement from Krakatoa, but this size of this company is pretty small, market cap $8 billion. So typically I ignore any sort of rally in these sort of companies. So new niobium REE, which is rare earths, I believe, gravity target identified at Mount Clare. I would have saw that particular title of that announcement and went to the next one. I don't really, I'm not an expert on reading anything like that. So I just move on. We'll have a look at the chart. And in fact, I can have a look at the chart now. Is XTA exciting or not? Is this a breakout? Oh, that's a 1 minute chart. We want to look at the daily chart. And I say no, just 1 day. There was a share price of this company went up a lot on the Thursday, 11th of April. So about 3 weeks ago, up 125%. So let's move on to something more interesting. Trivax. Yeah, nothing too interesting here. Senetas is a company I used to follow. I'm talking about 10 years ago, but not anymore. Low volume though. So nothing that I can remember. No company here that I remember releasing an announcement. Let's have a look by market cap. So Qube Holdings, should I give it away? Qube Holdings did come in number 1. It is the top announcement of the day, and there is potential that this could be a breakout possibility. Pexa Group had made it into my honorable mentions, up 11.44%. Clarity Pharmaceuticals, another good day. So, am I kicking myself for not taking position in that company? Not necessarily so. No. And Namoy Cotton, looks like there is a takeover bid for that company, up 12.5%. That did not quite make it onto my honorable mentions, just missed it. Shine Justice up a little bit. Final Group has been quite volatile. But other than that, yeah. So I'm not surprised to see Qube Holdings there. Wasn't expecting much from Pexa Group, but interesting to see it's on that list. Now let's have a look at the top losers today. And I do expect at least one company to be on this list. And there it is, coming in number 2, Bapcor. And this company has come in number 2 on the top announcements of the day. You might say, why is it not number 1? And the main reason is because Qube is a possible breakout. And the whole reason I do this every single day is I'm looking for breakouts. And Qube looks like it could be a breakout. But Bapcor hinted at a really negative trading update because I went to trading halt, and that just hinted it was going to be really bad, and it was bad. Bapcor share price down about 25%. Otherwise, nothing there that's of interest. Let's look at by market cap. Bapcor, what's happened with APM Human Services? Down 8.71%, maybe nothing. There was a takeover bid for this company, and I forget what's happening. Okay, no, that's old. Non-binding acquisition proposal business update. That's old. So this is just, I won't say noise. Brainchip down big, not surprising. Helloworld made it into my honorable mentions. Maybe it should have made it into my top 5. Down 11% on the back of a trading update. Metro Mining doing a capital raising, down 8.7%. So nothing really surprising there. And yeah, and a few other companies here that probably just moving on a little bit of noise. Just sort of noise. Yeah, just noise. Sometimes a company can go up 10% or down 10% in consecutive days on no news flow. So that's the ASX today. Interesting day on the markets. Now let's have a look at Amcor. So up another 4.6% today. So this, or the chart for this company yesterday was, wasn't that enthused by it, but today it's looking much better. This is a potential breakout. Share price now at $15 or just above $15. The last time share price was this high was back in September last year. So we are talking about a 6-month high in the share price. Some good volume coming in the last 2 days. Now, not massive volume, but good volume. And it's on the back of some positive financial news. Trading. It was a trading update or third quarter results, but it was a profit upgrade. So this is a potential trade and a potential shift in sentiment and a shift in the trend in the share price. So definitely put Amcor on your watch list. Why not? Put it onto your watch list for a potential buy. I did not do it yesterday, but now I will, just because of the share price today. And that could have been, the share price could have jumped up today because Amcor is traded on the New York Stock Exchange. In fact, I've got to have to put Amcor here. There it is, New York Stock Exchange, AMCR. And yesterday, or overnight, the share price of Amcor rallied 9.6%. So I'm wondering if the share price rallied here because it rallied there last night. But the reason it rallied there last night was because it rallied here yesterday, but not quite as much as 9.6%. So again, this could be a potential breakout. Amcor AMCR on the New York Stock Exchange. So definitely one to follow moving forward. Now let's have a look at the honorable mentions today. And I might have a look at some of these charts, United States companies charts later in the video. But other than that, I'll skip looking at those anymore. Okay, so actually, let's have a look at this. This is the announcements today. And funnily enough, the companies that came in at number 1 and number 3 on the top announcements of the day released their announcements yesterday afternoon or evening after I had finished recording the video. So those two companies are Qube and Iress. Now, I'm a little bit surprised by Iress. So here is Qube at 4:34 p.m. They released their announcement titled Financial Year 24 Trading Update and Outlook. Exactly the sort of announcement I will always open up and read. Iress released an announcement titled Iress Upgrades Financial Year 24 Earnings Guidance. I'm always going to open that. They released that at 6 p.m. And I'm surprised about the lack of interest in the market around Iress. I expected Iress to have a really good day. In fact, I expected Iress to have a better day than Qube. So maybe the market was expecting a profit upgrade from Iress and they weren't expecting one from Qube. But Qube, just based off the chart, looks more interesting than Iress. So I'll wait until I talk about both those companies later in the video. Now let's go back to this particular list. So we have a look by, actually we have to go to today. And remember I said on the 30th of April that that day, the last day of the quarter reporting season, is the busiest day of the quarter by far. 840 events released on that day. 136 events released yesterday, only 87 today. Much quieter, and I like the quiet. There's Senetas. This is why share price is up a fair bit. Senetas receives largest ever order and Voltiro update. And JX has released a quarterly update on Appendix 4C. That's a little bit late. JX, a little bit late. Okay, let's go back to the start of the day. And the first announcement that was released today is a company that I will be featuring in the top announcements of the day. Come on, update. Oh, sometimes ComSec it annoys me. It's not updating. It's got the last announcement here at 8:58 a.m. It's supposed to update. You'd think one of the biggest companies in Australia would have a good platform. There we go. Nuts, quite hasn't got there. Okay, weekend start, even though it hasn't quite updated yet. We can't see NAB releasing their results, half-year results. We do have a company that did make it onto my honourable mentions. A company called Great Western Exploration Limited secures WA government funding to drill giant copper gold targets. Share price is up 10.7%. The main reason I included this on the honourable mentions is just the chart of this company. And actually the chart doesn't look that bad. Well-defined downtrend for a while. And the share price and the trend is turning around. Sentiment is shifting. And it coincides with massive volume coming in. Not just like a short period of time where we saw massive volume, like a 1 or 2 day period. We are seeing large volume continue through 2024 as the share price is rallying. So the chart alone interests me when it comes to Great Western Exploration, but this is a story stock. So you have to be aware of that. Markup, 21.58 million. So it's just the chart that makes me interested in this company. Just look at the volume. Compare the volume to this time last year. Almost no volume this time last year. Now massive interest in this company. Okay. Then at 8:26 a.m. we had Insignia Financial third quarter quarterly business update. Had a quick look at it. So up 1.24%. And the main things about this one is the total net outflows for the quarter were 1.7 billion, largely reflecting the transitory impact of execution of wrap platform consolidation. So total net outflows is not positive to me, but there was some other strong language here, including continued strong progress on financial year 24 to 26 strategic initiatives. Now let's have a look at the chart for this company. So I was sort of ambivalent, is that the right word, around this particular announcement. So I just wanted to see how the market reacted. Market's sort of ambivalent too. But the chart's starting to look possibly interesting. I think the downtrend is trying to come to an end, but no trend in the share price just yet for Insignia. And then Still hasn't updated. It's just ridiculous, ComSec. Come on. I'm pretty sure there was nothing after Great Western Exploration apart from NAB. So let's move on to the next one. Pexa UK and NatWest Group announcement. And the market really liked this. Share price up 11.11%. So wasn't sure how the market was going to react to this. Typically, I'm not the biggest fan. Fan's not the right word, but I don't react to these type of announcements. Talking about a strategic partnership with NatWest. So who knows how this is going to benefit Pexa in the long term. It probably will benefit, but we just don't know how much. But the market likes it. And the market likes it. Share price up 11%. Is this a breakout? And the whole reason I'm doing this is I'm looking for breakouts on positive financial news. This is not a breakout, but I think the downtrend is an end. I thought the share price was trying to move into an uptrend a month ago. The share price dove. I did actually take a trading position in this because I do like this company for the long term. And share price is now back up to where it was towards the end of March into the start of April. So not quite a breakout, but very close. So this is a very important level. In fact, between here, which is about $13.60, and around about $14.20 is a fairly strong resistance level, but it's trying to move into that level. And if it does break above $14.20, that would be a bullish sign moving forward for Pexa Group. Still got a fair bit of a way to go. So that's Pexa Group. Made it to my honorable mentions, not quite. And then we have Woolworths, which did make it into my top 5. And then we have Bapcor, which made it to my number 2. Namoi, intention to make takeover bid. So up 12.5%. Healy Group did have a trading update, but share price flat. So that didn't even make it into my honorable mentions. Helloworld did though. 8.55, they did release a trading update. And share price down 10.66%. I actually didn't, when I read this, I didn't have that strong of an opinion either way. So this is sort of the announcement or trading update that I just want to see how the market reacts, and the market doesn't like it. So underlying EBITDA virtually flat from the third quarter financial year 23, TTV up a fair bit, total revenue, underlying EBITDA year to date up a fair bit from last year. And then maybe the market's just seeing not much growth. And you can see total transaction value falling during financial year 2024. Yeah, I don't know. I didn't see anything significantly outrageously negative about this, but I could be wrong. They reaffirmed guidance. So reaffirmed guidance, but the market just didn't like it. So let's have a look at the chart for Helloworld. Is the market overreacting? Is this leading to an opportunity? And based off this, I don't like it. Don't like the chart. I don't like the one-day counterstick. A lot of selling during the day. In fact, based off this one-day counterstick, the market initially didn't have that bad of opinion of this particular update because the share price opened about 270 where it closed, or just under where it closed yesterday, but the selling has come in during the day. So you can just see that maybe if you look at the 5-minute chart. Yeah, selling started within the first 5 minutes. So it wasn't on open where we saw the selling, and it does look like the selling has come to an end just based off this 5-minute chart. So Helloworld released a negative trading update, but I thought it was not that bad. And then I think that might be it. No, we don't. There's a few more to go in the honorable mentions. How could I forget? So there's Metro Mining announcing a $40 million placement, share price down 8.7%, which is understandable. And then Southern Cross Electrical Engineering, trading halt at 9:28 a.m. I saw this and went, oh no, they're going to do a capital raising. Are they doing a capital raising? The reason I thought that initially was just the share price or the chart. Share price on a beautiful run. Look at that beautiful run. And I am a shareholder of this company. And I just thought, well, management are taking the opportunity to raise some money because the share price now, or the company's valuation, is higher than it has been. And they're just seeing an opportunity to raise some money to maybe grow the company, which may not be a bad thing. So I opened up this announcement expecting the worst, which is what I do. I expect the worst, which means you get surprised and way more often than not. But this was not a couple raising. This was pending the announcement of a material project award. And thanks to Hot Copper, I actually did go there just to have a look. Someone actually did provide a link to what this material project is. Something to do with battery, $160 million battery contract somewhere in West Australia. They even mentioned Southern Cross Electrical Engineering in this particular announcement. So more than likely that is it. And whether that's material, I don't know. Interesting that they got into trading halt because of it, but yeah. And then at 9:41, we have another announcement released that I almost missed. Tourism Holdings went into a trading halt. Okay. So let's have a look at the chart. And I am paying attention to this company because they did have some goals or aspirations for the future. And I was thinking if they do reach those goals or aspirations, I think in the next few years, this company is ridiculously cheap. Ridiculously cheap. But the market didn't want a bar of it. And the market doesn't want a bar of that because look at the chart. Share price is in a downtrend. Well-defined downtrend. Share price at $2.60, down from $4 at its peak back in April of last year. So share price has dropped about 33% in the last year. Okay, so what's this trading halt about? Let's have a look. Trading halt. This is the most important thing. Right there. Requested trading halt to allow it to finalize its updated expectations for financial year 24 earnings and to provide updated guidance to the market, which is likely to be materially lower than its existing guidance. So this is going to be a profit downgrade, and the market doesn't like that. Share price will collapse a fair bit. However, based off the chart, the market completely and absolutely expected it. That's why the share price has been in a downturn or a downtrend. And I wonder if this is going to affect these aspirations the company had for the next few years. And as I mentioned before, if they did reach those aspirations, this company was looking absolutely dirt cheap. For instance, I think they were aspiring to have something like $60 million in profit within the next 3 years or something. So PE ratio 10.21, and even based off that, it looks cheap, but who knows? This could be a substantially decrease in their profit or expected profit. Maybe their profit will fall by half, which means the PE ratio will be then 20. Anyhow, and then should I include or look at? Shall I look at the Senetas? Share price up 66.7%. Okay, I should. Okay, this is just come in 3:07 p.m. So probably when I started recording this video, Senetas. So I have a feeling the share price in Senetas didn't rally. When I looked at the share price in market update, that did not include this particular announcement. So I think there was a loose lips, 50%. So it's going to be quite volatile. Share price opened at 1.4 cents. Yesterday it closed at 1.2 cents. So it opened up 0.2 cents higher. So again, I think there were people who already knew this announcement was coming. Share price has reached a high of 2.2 cents. I don't usually get excited about these announcements. So I'm a little bit different than the market. I don't care about these largest ever orders. Order is expected to add between $2.5 and $3 million to their revenue and between $2 to $2.3 million to their profit before tax. What about profit after tax, that sort of thing. So probably a little bit, when a company does have this sort of announcement and they do include numbers like that, I will become a little bit more interested in the announcement. So Senetas, if they released this announcement in the morning and I saw it, this would have made it into my top 5 announcements of the day. So that's why people, managers, CEOs, release your announcements early in the day so people like me, investors like me, have time to go through them. So let's have a look at the chart for Senetas. And I don't think the chart looks any good. Yes, the chart looks absolutely ugly. So share price now at 1.8 cents. So share price not that long ago, in fact, share price at the middle of April was at these levels. Share price was at these levels only 2 or 3 weeks ago. Well-defined downtrend for Senetas. For some reason, it's not updating, so I'm going to have to do this. There it goes. I don't know why it does that. You always want it to auto-correct to size. I followed this company many years ago when the share price was about 10 cents. So we're talking about 2015. So this area here, I was following this company. You'd see why I started following this company. Look at that chart. Back between 2013 and 15, share price went on a beautiful run. In fact, the share price went from below 1 cent or around 1 cent all the way to a high of 22 cents. And the company has not achieved anything since then. That's why I stopped following it. They have to achieve something, and maybe this is the start. This announcement is the start, but trend or the share price is really, or the chart is really weak right now. Okay, let's go to the top 5 announcements of the day, starting with announcement number 5, which is NAB. National Australia Bank still probably hasn't updated here. Still hasn't updated CommSec. NAB released their results at 8:01 a.m. Oh, 8 a.m. So just before this. Share price up 1.7%. So you might think these are really good results. No, they're not good results at all. In fact, when you look at the summary, you'd say, oh, these are pretty bad results. But it's not the results that matter, it's the expectations. Did these results better or fall below expectations? So cash earnings down 3.1% versus second half of 2023, down 12.8% versus first half of 2023. They're also talking about reasons why, if I can find it, probably won't be able to find it, reasons why it's weak. Okay. So net interest margins down 5 basis points to 1.72%. So that's not good. Reflects lending margin competitive pressures primarily relating to housing lending, along with higher term deposit costs and deposit mix impacts, partially offset by higher earnings on deposits and capital as a result of the rising interest rate environment, which more than likely is coming to an end. So things are not all that positive for the banking sector based just off these results. So why is the share price rallying? So obviously the market thinks these are okay results for a bank. I don't see why they're good. It's nothing spectacular. It's nothing horrible, but the banks are expensive. Now, NAB, I think, is at an interest rate, not an interest rate, P ratio of maybe 15 for NAB. If I was excited or if I wanted to buy some NAB shares, I'd want the P ratio to be less than 10. Now, I also look at price to book ratio, and to be honest with you, I prefer price to book ratio over P ratio, and even price to book ratio, these companies are expensive. And this is just based off historical levels you usually find with these companies. For instance, if you go to NAB in FinChat, in fact, I've never done this before in NAB, so hopefully this works. So it should work. Ratios, price to book, there it is, price to book. So yeah, this goes back 10 years. So price to book of NAB is around about 1.8, and this is the highest it's ever been. It never gets above 1.8. The only time it's been 1.8 in the past 10 years was back in 2015. So this is historical high levels when it comes to valuation for this company. And not only that, this half year was not that good. Everything went down. Well, the profit went down anyway, and the commentary was not that flash. So why are people paying up for National Australia Bank and other banks? I don't know why. I think it's just safety. I think it's just, well, these banks are, they're safe, they're defensive. I'm going to buy maybe dividends. Dividend yield is probably weak, I'd say. Dividend yield 5%. That's not that great. I don't think the share price is going to go up much from here. In fact, there's more chance the share price will go down. And you just look at the dividend history of this company. It's actually lower than it was between 2014 and 2018. During that period, it was flat. So there's a chance a dividend might actually drop from here. And they actually mentioned competitive pressures. There's a lot of competition in this space, and it's going to continue for the foreseeable future. So I'm not the fan of the banks. I'm pretty sure most of the professional industry, fund managers and the like, are not fans of the bank right now. It seems like it must be retail investors who just are obsessed with banks. I know a lot of investors who just love the banks because of dividends. That's usually all it is, and they think it's safe. Anyway, the only reason I would buy banks is when they look cheap. And as you can see here, based off the price to book ratio history of National Australia Bank, it's not cheap. Historically cheap. Okay. So that's coming in at number 5. We have National Australia Bank, share price up 1.7% today. Now let's have a look at the chart for NAB. And yeah, you should see by the chart, share price has gone on a nice run. Even back here when the share price was at its lows back in June of 2023. If you go back here, so June 2023, even then the price to book ratio got down to a low of 1.4, which is nowhere near low enough for me to get excited. I would get excited if it's below 1.2. It's been below 1.2 once during the COVID-19 financial panic, and then late in 2018, it got to these levels. I've only bought ANZ for a trade when this company went, they had their price to book or P ratio down a fair bit. Pretty sure it was a price P ratio. Let's have a look at their history. Here it is. So it would have been maybe 2016 when I got really, it would have been 2016 when the P ratio of ANZ got down below 10. It also got down below 10 for brief periods of time in the past 2 years. And I was close to buying ANZ at one point because of that. But if you look at the price to book, and I can put the price to book, I believe, on this. Oh no, I've got to get rid of P ratio. But the price to book ratio of ANZ is not at historically high levels. It's 1.25. And this would be the one company I might think about buying right now is ANZ Bank because it doesn't look excessively expensive compared to CBA. CBA is weird. This one's weird. I don't understand why the P ratio of CBA is 20. It's ridiculously high. Ridiculously high. I can understand post GFE or post COVID-19 financial panic because there was just too much exuberance in the market. But prior to COVID-19, the P ratio of CBA was hovering between about 12 and 18. Never got above 18. In fact, primarily it was between 13 and 16. Now it's above 20. Above 20. And if you look at the PB ratio, price to book, get rid of that. Yeah, the PB or price to book ratio of CBA is as high as it's been for almost 10 years. It's not cheap, but people for some reason just love putting the money into Commonwealth Bank. Okay, I've rambled on a little bit longer than I was going to. So that's number 5, NAB. I have no interest taking a position in this company at all at this point in time. I was trading ANZ and Bank of Queensland, but I've gotten out of both of those companies. So coming in number 4, we have Woolworths. We've already seen that Woolworths share price is down. They did release the third quarter sales results. Share price down 4.3%. So we'll have a look at the chart in a second. And I'll also have a look at the PE ratio history of this company. I think even now, even with this drop today, Woolworths is still looking expensive. And yeah, I liked this announcement, not because of the numbers. So the numbers were okay, sales up 2.8%, which you probably would expect sales to increase because of inflation. But they didn't mention food inflation is flat. They mentioned somewhere here. So, okay, growth. This is the sort of growth I would expect for this company. But the thing I was interested, and the reason why I liked this announcement was just this stuff, customer update. Top issues facing Australia and New Zealand. For instance, would it be surprised to you that the cost of living is the biggest issue facing Australians and crime is the lowest issue here? And you might be surprised by that because crime seems to be in the news, or youth crime is in the news everywhere, but we are more concerned about cost of living, followed by housing, then healthcare, then the economy, and then crime. They talk about price inflation here. And here's Australia food and New Zealand food change in total average price down. Yeah, it's almost at 0. I think that's 0, that line there. So it is down. And here is a portion of customers who say they're struggling to make ends meet by life stage. So where am I? I am younger singles and couples. No, okay. Middle-aged singles and couples. So, and that comparing from last year to this year. So most people are saying they're struggling right now, and it looks like families are struggling, and middle-aged singles and couples are struggling. Retirees are not struggling, which are not struggling as much, which is understandable. They're living the good life. And then percentage of customers using ways to save. Buy on special promotion. Make most of a reward loyalty program. Compare prices between supermarkets. Okay, I take advantage of buy on special promotion and compare prices between supermarkets, but I've been doing that forever. Why would you pay more for products if you can get it on special or promotion? And why buy a product at one supermarket at a higher price than the other supermarket? Shop around. And that's why I've saved a lot of money in the past. Well, one of the ways I've saved a lot of money, and then other stuff, regulatory changes, shunning food. So interesting, and I really like this announcement from Woolworths, just because there's some insights to how the consumer is going. But the market didn't like it. Well, they didn't like the numbers, I suppose. So let's have a look at the chart for Woolworths. Always have to look at my watch because I want to finish the video by 4 p.m. So I've got 15 minutes left. So this is a chart. Okay, before this particular announcement, there was no reason to even think about buying Woolworths because the share price was in a well-defined downtrend. Now, there is one reason if you think there's value, and I'll talk about value in a second. Share price in a well-defined downtrend and a lot of negative sentiment in this company. So why would you buy it? And there were a few people thinking around about $32 to $33 was good value for this company. I think not. So people were buying, but after today, share price now down to $30.45. Last time the share price was this low was back in 2020. So we're at a 4-year low with Woolworths, and even the weekly chart, after the share price had been in a weekly uptrend for about 6-7 years, we'll say 5 years, share price is now in a weekly downtrend. Okay, let's have a look at the PE ratio history. I don't think this is going to work because I'm pretty sure Woolworths reported a loss in the last half. I could be wrong. Yeah, PE ratio negative 4,528. Well, that's not right. So it's going to be hard to look at the PE ratio for this company because they say they're not profitable. So what else can we look? And you can see this here. Yeah, it's just, in fact, what I might do is, here we go. So the problem with a company like PE ratio is sometimes a company will have abnormal profits or abnormal losses, and you can probably see this. The PE ratio of Woolworths, or the true PE ratio of Woolworths back in 2021 was not 60 and was not 60 in 2017. A true PE ratio of this company was back in 2015-16. When you see the PE ratio of this company between 10 and 15, that's what I would pay. In fact, it got below 10 in 2016, which was understandable. That was the time to buy this company. Now the PE ratio of this company is almost 30, and this is going. Yeah, I'd say it's almost 30 based off last year's profit. I did have a look at this, and it was about 30. You could buy Alphabet, you could buy Microsoft, you could buy many of these growing tech companies in America at a lower valuation than Woolworths right now. That is ridiculous. I understand Woolworths is offensive, but why would you buy Woolworths instead of buying these other companies that are going to grow massively over the next 5 to 10 years when Woolworths is going to be almost the same level in the next 5 to 10 years? It might grow a little bit, but not all that much. Anyway, so like the announcement, I like the information they have given us, but I still think this company is too expensive. I would buy Woolworths when the share price got below maybe $20. So still about 33% lower than it is now. Okay, and just to show you, in fact, this is what you could do. This is how I did it. If you look at the profit last year, so 1.62 billion profit, which is about normal. 1.55 the previous year, 2 billion, 1.2 billion, 1.6. So about $1.6 billion of profit is sort of normal for this company. That's sort of what we've seen over the last 5 years. Market cap of this company is 38.8 billion. So that means the market cap of this company is about 25. Yeah, 25. So 1.6 times that by 10, 16, 32. Yeah, PE ratio of this company based off last year's earnings is 25. 25. Wow. And people still think this is cheap. No, it's not. It still blows my mind that people think this is cheap. PE ratio of 25. No. I'd rather buy those other tech companies at PE ratio lower than this. You think Alphabet has a PE ratio, I'm saying about 20 now, I think. No, 25. So Alphabet has a PE ratio of 25. Woolworths has a PE ratio of 25. Why would you even think about buying Woolworths when you could buy Alphabet? And just look at the growth in this company. It's just ridiculous. So let's go to the income statement. Revenue growth. It's just continual revenue growth. It's just continual. Let's go to Woolworths. Look at their revenue growth over the last 10 years. Somewhere here. Here it is. Oh, I've got to get rid of P ratio. Look at that revenue growth. There's no revenue growth. It's flat. Exactly what you would expect from a company like this. Just flat revenue over the past 10 years. And both these companies have the same P ratio right now. That's ridiculous, in my opinion. Anyway, rant over in terms of Woolworths. Coming in at number 3, we have Iress. I thought the share price would be way more than this. In fact, I thought the share price would be rallying. So they released yesterday afternoon or evening an earnings upgrade. And this is a true earnings upgrade, although I think it might be EBITDA, which I don't think is true earnings. Adjusted EBITDA increased it from between 117 and 127 million up to between 122 and 132 million. And there was some positive commentary here as well. Management has changed. They've gone through this reconfiguration of transformation, and this is reflected in their improved outlook for financial year 24. This upgrade comes as a result of bringing forward the benefits of transformation through stronger cost discipline and a clear focus on our core businesses. So things are moving in the right direction for Iress. So let's have a look at the chart. And I thought this could be a breakout possibility, but let's have a look at the daily chart. Not quite. So I really want to see the share price get above 870 and stay above that, preferably above $9 for this to be a true breakout. But I think one of the things is the market is still a little bit wary about this company. And you can see that just by looking at the weekly chart. So really this company has done nothing the last few years. And it does look expensive. Well, it has no P ratio because I think it was not profitable last year. Yeah. In the last half year, was it profitable? Slightly profitable. So you can't really determine whether this company is expensive. But if you look at some of the profits before last year, this company had profits between about 50 and 75 million. So let's have 75 million. Market cap of 1.5 billion. So that means this company is trading on about 20 P ratio right now if I return back to a profit of 75 million. So you could probably argue even with this profit upgrade, company is still looking a little bit expensive right now. And what was it? Actually, we can do it by EBITDA. So 120 was a market cap. So it's trading on over 10 times EBITDA, adjusted EBITDA. So yeah, you could probably still argue this company expensive, but I just think this could be a possible turnaround, and this could be wanting to move into an uptrend over the next few days. So I'm going to keep my eye on Iress and just see how the market reacts in the next few days. So that coming in at number 3, we have Iress. Coming in at number 2, we have Bapcor. Not quite coming in at number 1. Share price down about 25%. Was down over 30% early in the day. Share price went to a low of $3.76 within the first seconds of trading. Open at $4.11. Someone dumped in that first few seconds of trading. Share price went to a low of $3.76. If I had a chance, and I saw the share price at $3.76, I would consider buying this company. Would consider it. Okay, trading update. So this company went to a trading halt on the 30th of April because of they had to update the trading. And almost immediately I thought this is going to be negative, and it was negative. So the main things I look here are just numbers, and then the reasons why. So NPAT will be below that of the first half, 54.2, and the reasons behind this. Trading conditions in retail business has remained challenging due to weak consumer confidence and lower levels of discretionary spending. Wholesale business is being impacted by competitive pricing, resulting in volume and margin compression. And they go through some other reasons here, including incremental overheads and higher interest costs. So you don't want to see, particularly that second point, competitive pressures resulting in volume and margin compression, which means this company in the wholesale business has no competitive advantage. So that is negative from Bapcor, and the chart looks pretty bad right now for Bapcor. So share price, down a fair bit. And the last time share price was as low for Bapcor was way back in sort of April 2020, as it was coming out of the COVID-19 financial panic. So we're talking about a 4-year low for Bapcor. Share price as high as $8.50 back in 2021. Now it's 438. So almost share price has fallen 50% from its highs back in 2021. Is there value in this company? Potentially. I reckon there could be potential value, but I'm always wary of these sort of negative trading updates. But if it's just short term, not structural, then I would be interested. But I think there could be some structural issues with this company moving forward over the next 5 to 10 years. Possibly. Okay, so coming in number 2, we have Bapcor. Coming in number 1, the announcement of the day, which was released yesterday afternoon, Qube Holdings. I'm hoping I'm pronouncing the name right. QUBE, trading update and outlook. And this is exactly what I'm looking for in an announcement. I thought Iress was too, but the market has disappointed me with Iress. Okay. So really positive. So this company is a logistics company, a logistic supply chain. Yeah, probably the best way I would say is a supply chain logistics company. In fact, they call themselves integrated import and export logistics services company. Okay, it's probably a better way. I'd say supply chain, which is import and export. Okay, so really positive commentary in this. So Qube now expects to deliver underlying NPATA and EPSA growth in financial 24 of 10 to 15% compared to 5 to 10% that was previously provided. So this is a really good upgrade. And then they talk about stuff that's happening, good stuff that's happening. And they also give the condition that these guidance is subject to market conditions, remaining broadly consistent with recent trends, and no adverse events, including weather conditions or industrial action, remains to be seen. And they just go through why things are looking good. So here we go. So you can go through that yourself. So a lot of stuff to go through here. And this is exactly what I'm looking for in a trading update, a profit upgrade. In this case, it's NPATA and EPSA. No idea what that. Net profit after tax and amortization, or before amortization, something like that. And the most important thing when it comes to Qube, and the reason why this company made it into my became the top announcement of the day is simple. It's a breakout. Now, it needs to remain where it is, can't fall tomorrow. So what I'm looking for, positive financial news. Share price at least a 6-month high, and for Qube, it's a multi-year high, I believe. In fact, almost all-time high. So the share price right now is at the levels it was just prior to the COVID-19 financial panic. And probably the only thing missing, I would like to see higher volume. We haven't seen extreme volume today. If we saw volume double than it was today, so far, I would be really interested in this. Little bit of selling during the day, a little bit, but not a lot. Share price at $3.50. So this is a breakout. This is a definition of a breakout and a potential buy in the next few days. If I see the share price just going sideways, or if I see the share price just retreat back to 340 and then start going up again, that could be when I buy a position in this company, if I buy a position. Okay, that's all I'm going to have for today's video because the time is 4 p.m. So no charts today, although I've shown you a lot of charts. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.